Good morning, everybody. My name is Simon Taylor, and welcome to episode 126 of the FinTech Insider Breakfast Show. In this show, we bring you the best and brightest from around the fintech and banking landscape every single weekday, straight to your homes, live here on LinkedIn. Today, I'm joined by Neil Campbell, who's the VP of Growth over at Moneybox. Hey, Neil. On today's episode, we're going to hear a little bit about how Moneybox are helping their customers invest and save for the future by offering transparent and informative products. How's it going, Neil? How's your morning?
Very well, thank you. Yes, very, very happy to be on the show, and thanks for having us.
You are very welcome, sir. I'd love to get to everything Moneybox, but audience, do remember to send in your questions. The comments box is right there in the sidebar. Send in your questions. We'll get them to Neil. And if you've got any questions about Moneybox, any questions about saving, then do send them through. But before we get to that, Neil, do you want to just tell us a little bit about you and what you do over at Moneybox?
Yes, so I think probably best if I first start with Moneybox. So we are a wealth management app. We were set up 5 years ago. Very much the kind of mission of the company is to help everyone save and invest for their future. In that 5 years, we've made absolutely brilliant progress. So we've just passed 450,000 customers who are kind of saving with us. We've also just passed 1 billion in assets under administration. And whereas the kind of company very much started as a investment only, so a kind of investment ISAs and a kind of general investment account, we have progressed since then, and especially in the last 12 months, to add a range of savings accounts. We've also added kind of lifetime ISA, both a kind of investment lifetime ISA and a cash lifetime ISA, which is a great product for helping people kind of buy their first home. And then more recently, we've kind of got into kind of pensions. So really kind of thinking about the long-term kind of financial kind of management of people's kind of entire financial lives. For me personally, so I'm the VP of Growth at Moneybox. Growth is one of those kind of terms that's often sort of ill-defined and has different kind of meanings in different companies. But for us, it's pretty much anything that kind of makes Moneybox more valuable as a whole. And that really means that I kind of look after marketing. So, how do we get more customers in to sort of experience the Moneybox service? But then very importantly at Moneybox, how do we take those kind of existing customers and really increase their engagement, increase their kind of, their usage of the kind of service and extra kind of products. I also kind of look after a bunch of sort of extra kind of revenue streams. So we have a Moneybox Plus loyalty scheme where customers can earn balance by shopping through the app. So that's kind of great service for customers. And actually, I kind of, one of my projects recently was our most recent crowdfund raise, which I'm sure we'll talk about later. And then in terms of my background, I've always kind of been consumer internet. So I was Amazon for a number of years, startup called Rangespan a while ago with a bunch of ex-Amazon guys. Most recently, Naked Wine. So always kind of direct to consumer kind of internet stuff, really. And I really got into Moneybox. One of the co-founders, Charlie, I worked with in consulting many years ago. And so, yeah, just kind of knew of him from there.
Small world always with these things, and
Yes.
Growth is such an interesting space, especially when dealing with people's money. Really impressive numbers: 450,000 customers, billions assets under management. If I were a bank, though, I'd look at that and say, "Oh, well, these are the same products we offer." But what's different about what you guys do? Because I think there's a customer experience angle, or is it around financial literacy? What would you say the key is that makes what you guys do different?
Yeah, so I think there's a kind of couple of ways to kind of cut it and sort of how do we make it different. But I think, banks can traditionally be very focused on kind of products, whereas at Moneybox, we like to think we're more focused on outcomes, so how do we kind of help people actually achieve their kind of goals? And for a lot of people, that it's all about getting started. So, we have to have an app which makes it very, very easy to get started off the bat. And so the fact that it's one app, it's very easy to download, it's very quick to kind of get set up. You can do it in minutes. Once you're kind of set up, features like kind of roundups and, setting up kind of weekly deposit amounts make it sort of super simple. And so, we always kind of talk about, the best financial app is one that encourages you to save. It's maybe not, it doesn't have to have lots of bells and whistles. It just needs to have that basic functionality. And so around that, then you have to kind of put a kind of financial education piece as well. So you have to sort of say, look, I don't know what your goal is, but I'm going to help you kind of work out what it is and what the kind of right product is for you. And so, we have a whole range of content to engage customers around that. Probably most importantly is the kind of tools that are kind of built into the app. So a kind of time machine, which makes you realize like what my regular kind of savings habit is really going to mean in the future for me. Things like house buying calculators that allow you to sort of say, well, if my big goal is to own my own home, here's how I kind of break it down, and here's how I can, the government lifetime ISA, which has a 25% bonus on it from the government. Here's how that helps me get to the goal. And then I think on top of those tools, there's also things like just videos and blogs and really kind of engaging kind of content. And so it's about taking people on that. It's not just about selling them a product. You have the product now. I will send you a letter every 3 months, sort of giving you a kind of balance update. It's about, well, we have this product. You're trying to get to a goal. How do I engage you and encourage you along that journey as well?
And I think that engagement piece is so key. I think we can pick up on that a little bit more around this question, because building communication and transparency in that is going to be so crucial when users are thinking about the rest of their life, but also may not have the financial literacy they need. I really love the point you made about how banks just sort of sell products, but you're trying to engage somebody with their goal. How do you communicate? You mentioned some of the blogs and some of the models, but what is it underneath that? Is it a tone thing? Is it how you design the products? What is it that gets under the skin of that?
Yeah, so I think it's a couple of things. So firstly, we really have the opportunity to communicate. So Moneybox customers are highly engaged. 20% of them check the app daily, which basically means you have that outlet in order to kind of talk to them. And when you do that and you have that kind of audience, the kind of question is, well, what are you going to serve them? What's the kind of right content to give them? And as I said, it really is that kind of range, but the tone within the content is really about removing the jargon from it. And like a traditional approach within kind of financial sort of circles is to sort of talk about the interest rate and how much interest you're getting and things like that, which is obviously important. But what's more important is, well, how is that going to get you to your goal? And so how is that going to really project forward and see what's realistic? And so a good example of that is we have a time machine tool which sort of says, okay, you're saving this amount, this is what it looks like 10 years out. Okay, if you change your settings, this is the impact of that. And that's the kind of stuff that you can talk to people forever about the magic of compounding and compound interest, etc. But when you sort of say to someone, if you change from £15 a week to £10 a week, the outcome in 10 years time is thousands of pounds, then that kind of really makes it real. If that makes sense.
And I think that ability to make it real and engaging, because calculators have been around for quite some time, but if you're in the app and you can see it and you can attach it to the goal on a regular basis, that sort of regular habit is really, really powerful. I want to ask, have you seen, especially during the lockdown period, have you seen a different demographic getting into investing? Have you seen behavior shifts, and what might that be?
Yeah, I think that's a great question. So the appeal of Moneybox is pretty much universal. It's designed to be an app which is accessible to everyone. We have a really kind of broad range of kind of customers, and I think that's really kind of continued through lockdown. I think what you've sort of seen, and this is probably reflected in the country as a whole, is during lockdown, some people have been affected obviously very badly by COVID. So Moneybox is there to help you save for a kind of rainy day, and for a lot of people that rainy day suddenly turned up, and so Moneybox was there to obviously help them access their funds, obviously continue on a savings journey, but at that point in their lives they kind of needed access to their funds, and some of them were very grateful that they'd got into the kind of Moneybox habit years before. And then I think on the other side, obviously there are customers who are no longer buying expensive season tickets into work, or able to kind of work from home, aren't expending money on very expensive sort of city lunches, and they've been able to kind of save more. And so we've sort of seen that for a lot of our customers, the kind of saving rates have gone up. And actually during kind of lockdown, we saw some of our kind of record deposit months. So, there's months where we took well over £100 million in deposits. So you can sort of see that, yeah, it really kind of depends on the individual.
And that's so true of everything, and I guess what we're facing into as well. I can see some good questions coming into audience. Do keep asking those. Before I get to some audience questions, I can see you guys had a bit of good news earlier. The Series C raise of crowdfunding. Tell us about that, and tell us what you're going to do with the raise. What's next for you guys?
Yeah, I think obviously, yeah, really big news for us. Really kind of two parts to it. One was a kind of Series C institutional round, which was just over £30 million. That was great, obviously because it's a real validation of the model. But sort of within that, one of our big investors is Eight Roads, who are the venture capital arm of Fidelity. They were a Series B investor. Always great when a kind of Series B investor kind of comes back and invests in Series C. Generally means that all those kind of promises you made at the Series B round, you've actually kind of managed to hold, which is really great. And then we also kind of had new institutional investors come in as well. So that was really great just to get such a kind of big round, and to do it at a time of kind of COVID is a real testament to the model. And versus the Series B, it was a bigger fund. It was a big increase in kind of valuation. So all that kind of positive signal. But what we were most excited about actually was we were able to do a crowdfund at the same time. So really give Moneybox investors a chance to kind of participate in the success of the company. And that was really important to us because, we know that we've got a very kind of loyal fan base, and, it's just an opportunity to kind of let them kind of participate in that. So we put it live. We raised £7 million in kind of 2 days. 4 million of that came in the kind of first 4 hours. And what really pleased us was actually in terms of the sheer number of investors. So we had more than 16,000 come in, which is just a real testament to the the kind of broad base of support for Moneybox. So really great.
Real financial inclusion piece to that as well, which is how do you get access to high growth tech before crowdfunding came along, and working with somebody that they know is really powerful. But also, is there an engagement piece to that? Like they're loyal folks, but actually does having a part of your journey, part of your success really create stickier users perhaps?
Yes, and I think we already knew that kind of our loyal users were very sticky, but we really kind of want to engage them as a group. And so, as part of the kind of crowdfund, one of the things we sort of said is like, right, now we have this kind of group and they're super engaged. What can we do? And so we're kind of, got the shareholder forums, and we can sort of get their kind of feedback, use them as a lot of our kind of test users and beta users, and early kind of polls on, how do we prioritize between this product and this product, what we should launch and sort of put on the roadmap. And so I think we are at a time when, people or consumers just aren't, just plain consumers of services. They want to kind of buy into the company and into the mission and what we're kind of trying to do for everyone. And I think it's just great that we can be able to do that through crowdfund.
And I think just on that mission piece, you guys have achieved carbon neutral status and became the first UK fintech to sign the UN climate neutral pledge. Can you tell us about that and what that means for you as an organization?
Yes, this is something that we did back in March. It feels a long time ago, both the kind of external environment and all the stuff we've been doing since. But yeah, so obviously kind of carbon neutrality and kind of thinking about climate change and the kind of our kind of shared future. It's something it's really important to our kind of customers. It's really important to our staff. And actually the whole thing came out of our co-founder, Charlie, his young daughter, to ask him a direct question. Daddy, what are you kind of doing about this? And the answer was, well, I'm not sure. Let's actually go and do something. And what we sort of decided is that we should firstly do the right thing, which is get involved, and then we should do it right. And so we partnered with Electro, who are the sort of gold standard UN certified in terms of both the kind of measurement of your carbon footprint and how do you kind of offset it in a kind of regular way. And we got them in, and they did the work. We worked out the numbers. We realized it was affordable given our kind of current model at the minute, and we just made it happen. And it's super important to us. It's kind of the start of a kind of raft of sort of green kind of initiatives. So, for example, we have an ESG fund, a sort of environmental sustainable kind of governance fund. That's something that we really encourage kind of people to get involved in, and I'm sure there'll be kind of more than that in the future. And I have, for your kind of listeners, I think one of the main messages I just kind of like to get out there, because I'm quite passionate about kind of climate stuff as well, is that if you really want to make a difference, actually taking your kind of pension or your kind of long-term savings and investing in an ESG fund is probably one of the biggest, things that you can do, along with all the great stuff in your kind of day-to-day life around, restricting our travel and changing diets. It's just one of the biggest things you can do, because it really supports an industry and really sort of says, right, we're going to support these industries and help them grow. And the performance of the funds is great. You're not losing anything on them.
Indeed, I saw a great forecast that said by 2030, ESG funds might hit $1 trillion under management, but that's to the overall trillion under the entire industry. I think we do a lot better than that. That's absolutely how we endorse that view. We're going to get some questions. Do keep sending them in. Good one from Emma Steele. She's morning, Emma. To what extent do you guys think about the money psychology, thinking about the user journey and the fact that different people sometimes have opposite approaches when it comes to money? Not everybody's the same shape and size, and they're all weird.
Yeah, so that's a really good question from Emma. So I think when we kind of look at financial, take the kind of very broad church of sorting out your financial future, if you will, the biggest kind of barrier there isn't competitors or isn't it's kind of getting over the inertia. It's really sort of saying, sorting out your financial future is something that if you don't do it tomorrow, it's not going to kill you. If you don't do it next week, it's not going to be the end of the world. But in 5 years and 10 years and certainly in 30 years, you're going to really regret having done it 30 years ago. And so, I think that's the main thing that we kind of take at Moneybox is, how do I kind of get people over that inertia? And it's a combination of lots of things that we've kind of talked about. So, it's the kind of how easy it is to start. It's the mechanisms that help you kind of save without thinking. It's the app which encourages you to save. The habit is more important than the actual amount, certainly in the kind of early years. But then it's having that sort of wide range of products which kind of suits every kind of financial need. So as Emma says, people are very different in their kind of approach to that. And Moneybox is an app that does that sort of, I just want to get started and I want to drip feed and kind of put it in the roundups. It's also an app where you kind of turn up and you have £10,000 and you want to put it straight into an ISA and invest it in great low tracker funds, it can do that as well. So if you have 4 pensions kind of from a previous, 4 roles that you've been meaning to sort out and the paperwork sitting at home, we can bring all those together and kind of make them one thing so you know exactly where your kind of pension situation is. So I really do think it's about fighting inertia, giving the incentives, making it easy, but then once you're in, having the sort of range of products that can adapt each customer.
And I think people see the everyday savings habit as being one thing versus the manage all of my future as being another thing, and actually one can lead to the other. I love that. It was almost a comment, but in the early days, building the habit is more important than the actual amount, and so often that gets lost. I thought that was a great point.
And actually, just to kind of go back to my background and why I'm kind of passionate about Moneybox is that I very distinctly remember at age 21 when I was sort of getting my first proper jobs and things. My father sat me down and said, "Put 10% away. Just even think about it. Put it away now before you've even thought that you've kind of earned that money." And it was one of those things that probably 20 years later, I kind of sat down and was just pleasantly surprised that actually, because I kind of got in early, it's going to be okay. It's one of those things. I'm in a pretty good position. And that's a little bit what we kind of want to bring to everyone with Moneybox. We want to kind of bring that, sound advice, but just make it very easy to kind of get started in that way.
Yeah, likewise, I was very lucky to join British Telecom age 16 and get in super early, and that was one of the old index-linked pensions, albeit I didn't keep with it forever. So I'm mad enthusiastic about everybody as well doing the same. To that question, Titania Marsh has just asked a very interesting follow-on, which is how would you engage with people at different stages of life, whether it's pensions or building up the wealth, because those life phases are so important.
Yeah, again, another great question. And so I think, there is a kind of transition, kind of go through people's kind of financial lives as to what their goals are, what the kind of products are. We all have customers kind of coming in at every kind of stage of that. I think the sort of, and this is very generic, so it'll vary kind of by person and everything, but very generically, it kind of starts off with, how do I just have a savings habit? How do I have some savings? How am I, start to build up a balance that is there for emergencies, or it's just because I want to go on holiday, or I want Christmas not to be a burden. And so there's a kind of starting off, cash kind of savings, so how do I just get in the habit, make sure I'm saving regularly, kind of build that up. The next stage is probably then, okay, what's my big financial goal? And for a lot of people, that's I want to buy my own home. And so that kind of goes into, right, I should get a lifetime ISA. Depending on the the kind of time frame, it might be a cash lifetime ISA if I want the surety, if I'm just going to make steady progress towards it, or if I want to going to take 10 years over it and the stock market makes more sense, it could be an investment ISA. So there's probably a a sort of 23 to 35, let's kind of focus kind of house buying. Outside that, obviously, kind of people start to get into having families and sort of more general savings, and so probably don't need them as much as an emergency. Maybe it's things like junior ISAs for their kids' education, or Maybe it's just general savings they want to invest in the stock market. And so it becomes a much more kind of investment ISA sort of approach. And then kind of underlying all that is pensions, which is, with auto enrollment in the UK, everyone gets a pension pretty much for every job. And so over your kind of lifetime, those different jobs, the average person is going to have 11 jobs in their kind of lifetime now. You're building up these kind of pension pots. And if you really want to kind of stay on top of that, you should probably be kind of consolidating that as you kind of go along, just so you know entirely what your kind of pension picture is. And so obviously the kind of pensions it becomes a lot more important the kind of older you are, because it's bigger amounts, more amounts going into your pension, etc. But back to questions, well, how do you kind of adapt to kind of different people? So, well, I think they just come in different points within that journey. They kind of there's different times. So some people are savings first. Some are like, I've come in with a very focused goal. Other are, I just want to kind of open an ISA or move an ISA from another provider.
There's a good question here from Bhavin Shah that sort of links to that, which is the FCA talks about the advice gap, especially around pensionable age. And Bhavin asks, how do you differentiate between providing that sort of guidance and education versus advice?
So firstly, to be very clear, we are, FCA regulated, but we're not regulated for advice. So we're very much on the kind of the guidance side of things. And there it's just about kind of setting out those kind of roadmaps to people. So we don't do anything that is individually tailored to, one sort of person. But that's okay, because a lot of this stuff is just general kind of common sense stuff with on the road. So, if you're like, for example, if you want to buy your own home, you would be crazy not to take the 25% bonus off the government for a lifetime ISA. So, our level of guidance is to say, buying your own home, get a lifetime ISA. That's the sort of the level of kind of common sense stuff, but it's not tailored to an individual kind of customer.
It's so like best practice that you could find on a website somewhere. You just happen to be repeating that best practice in your education materials.
Very much so, and kind of probably more importantly is kind of building that best practice into the app. So you talked about kind of tools, and like tools have been around for ages and all the rest. They're generally marketing tools. They're generally sort of stuff that you have at the start of the journey, and then you open the product and you never hear them again. Whereas our tools are much more kind of inbuilt into the actual usage of the product, because it's about engagement. It's not about customer and then we're done, we're happy kind of thing. It's about and that's why my kind of role is very much both new customers and how do I engage them once they're kind of on board.
Can I double click on that? Because there's a way startups and tech thinks about engagement and daily active users, monthly active users, kind of net revenue retention, all of this stuff that is probably kind of familiar to you, but not to the world of banking. Do you want to unpack what sort of metrics you use and what good engagement looks like, and what do you worry about when you see it from a cohort analysis standpoint, etc.? Let's just pull back the curtain a little.
So I think pretty much as you sort of said, in a kind of traditional kind of financial world, they think about products, and their products are kind of profitability, and they're very much kind of P&L approach to that. And the kind of keyword you mentioned right at the end of your kind of question there was kind of cohort analysis. So how do I think about kind of customers going through a kind of life cycle kind of journey? So customers start at year zero, and then they kind of build up balances over time. And so that's really how we kind of think about it. So we think about what's our kind of cost to acquire a customer and kind of get the word out on Moneybox. But then how does that kind of develop over time? And the development over time is kind of interesting, because that essentially builds up to your kind of lifetime value. But the issue you have in financial services is that the lifetime values are very, very long term. So if you're managing someone's pension, you're hoping to probably be managing it for the next 35 years. And so, what do you know about retention in 30 years time and things like that? And so it becomes a lot more of a kind of, well, let's not worry about lifetime value too much. Let's worry more about kind of payback. So let's kind of think about, okay, if we've acquired this customer and it costs us a chunk of money to acquire some of those kind of customers, when do we kind of get that money back, and what can we do to sort of accelerate that? And the acceleration is basically about engagement, and engagement is about helping people save more. And so it kind of works well, because it's in the kind of customer's interest, and it's in our interest as well. As we've kind of talked about, that engagement is about the right products, if someone has a really good financial goal, like buying a house to go after, suddenly they're very motivated and it gives them a lot of discipline within their lives, et cetera, et cetera.
It's an interesting flywheel that I think hasn't worked on the deposits and lending space quite as well, which is get people in so that I can lend to them more, which was the old cross-sell model. For you, the more somebody saves, the more engaged they become, the more money you make, the more you want to engage them, the more that they'll save, which is more in their interest. So you've kind of got this flywheel of engagement that you can kind of get moving. How do you think about how you make sure that stays in the customer's interest and that you don't lose focus on their goals?
I think a very good question. I think if we ever lost, the customers' goals weren't important, then customers would let us know by leaving the service. I think that's the ultimate kind of test of this stuff. But I also think, I think a good example of this is, we don't do kind of individual stock trading at the minute. We don't do kind of Bitcoin or gold at the minute. And those are kind of investments which are, I think a lot of customers would kind of, be interested in them. But the kind of question is, well, why are they interested in them? Is it a kind of fear of missing out? Because if you're investing something because of a fear of missing out of something that's on a surge, it's probably not the right approach. What's much more sensible is have a fixed savings habit, save regularly, save into kind of low cost funds, back the kind of stock market over a kind of 10-year period, not over a kind of 3-month period, those kind of behaviors. And so I think there's things like that.
And it's kind of consistent that, are you chasing the next big thing, or are you chasing the thing that's in the customer's interests? So what's next for Moneybox? Where are you guys headed from here?
So I think, as we kind of talked about, we've had a pretty crazy in the last 12 months. We launched savings accounts and pensions, and even just last week we launched a kind of 45-day notice savings account. This week we've kind of gone live with, helping people find their kind of, pension providers from old companies. We've actually, on the back of kind of crowdfund, we've offered people kind of reward shares in addition to kind of transferring their kind of pensions. And so, as you can see, we've been really busy. Now the fact that we have all this kind of funding behind us basically means that sort of pace of change will kind of accelerate as we just get more staff and more kind of development, and we can make bigger bets in kind of different areas. So I don't think I can give you anything specific, because I think, as you know, the sort of priorities around these things to change all the time, and I would much rather announce stuff when it's ready to go and kind of customers can jump in and use it. But I think what you can say is that, the next 12 months will be very exciting for Moneybox, and there'll be loads of kind of new features out there.
Yeah, well, thank you for a phenomenal conversation. We are coming to the top of the hour, and I'm sure everybody's got days to get to. Thanks everybody as well for sending in your questions. There's several I didn't get to, but keep the discussion going, and do definitely check out Moneybox. And speaking of checking out Moneybox, Neil, where can people find out more about you and Moneybox itself?
Yeah, so the absolute simplest thing, if you don't have the app, is go to the Apple App Store or Google Play Store, type in Moneybox, download the app, and you've really got to use the tool to kind of understand it and sort of see how it works. And it's really great. I'm biased, but it's really a great tool for people. And if you want to just kind of follow us for kind of news and stuff in general, we obviously have the kind of Twitter presence and Facebook and everything, or you can go to the website, which is moneyboxapp.com.
Thank you so much. All right, that's all we have time for today. Tomorrow, the one and only Adam Davis, the low-key MVP of 11FS, will be joined by Amar Akhtar from Yobotta. So have a good day, everybody, and we shall see you soon.
Thank you very much, Adam.